Did you vote for a strategic Bitcoin reserve and all you got was this dumb statue? Well, I got bad news for you. Breaking: a Freedom of Information request just revealed the US government has made zero progress, again zero, on creating a strategic Bitcoin reserve. WTF is going on over there? And if you think this is bearish, cry harder, because nothing, absolutely nothing, stops this train. Bitcoin reserve or not, Arthur Hayes just dropped a $3.4 million price target by 2028. What does Hayes know that the rest of the world doesn't? You're about to find out. And get this, a major global bank is now predicting central banks will be holding Bitcoin on their balance sheets by 2030. The future is orange. We got a lot to get to today. All right, let's start with the big one. We've all been hearing the hype. Trump signed the order. The Treasury was supposed to coordinate agency reviews on a strategic Bitcoin reserve and transferring seized assets into a digital stockpile. April deadline came and went, and guess what? This new Freedom of Information request says, quote, the Treasury does not have the reports. Contact IRS, Homeland Security, or Secret Service directly. In other words, it's chaos. They were supposed to show their homework by April 5th, and instead, the dog ate it, or Janet Yellen ate it. Who knows? This is either incompetence or a deliberate stall. Because remember, we exposed months ago that the U.S. Marshals only hold about 30,000 Bitcoin, not the 200,000 that people claimed, or thought, or was reportedly, allegedly held. Though there are some discrepancies there. Senator Lummis tried to brush it off as sales, but the truth is, the U.S. doesn't have what people think it has. So, no strategic reserve yet, but here is the signal. If governments can't even manage paperwork, Bitcoin doesn't stop, and state ineptitude is incredibly bullish for Bitcoin. Satoshi doesn't wait on bureaucracy. Now let's talk. Arthur Hayes, the BitMEX co-founder, just dropped one of the spiciest essays of the year, and he didn't hold back. Hayes argues that Trump and his Treasury Secretary, Buffalo Bill Bessent, are about to put the Fed in a chokehold. We're talking 1940s-style yield curve control. The government caps bond yields, forces the Fed to print trillions, and channels cheap credit into America's industrial base. Let's break it down. From 1942 to 1951, the Fed literally kept short-term rates under 1% and long-term bonds at 2.5%, so the government could finance World War II. Hayes says Trump and Bessent want to rerun that playbook. Only this time, it's not to defeat Hitler, it's to defeat the debt monster and try to reindustrialize America. Here's the key. Hayes says small and medium banks can't lend right now because the curve is too flat. You borrow short, lend long. If that spread is gone, lending dies. But if Trump forces the curve steeper, boom, credit flows to Main Street, not just Wall Street. To make it work, the Fed has to buy an infinite amount of treasuries. That's money printing on steroids. And when you print, what happens? Dollar tanks, gold pumps, and Bitcoin goes vertical. Hayes even predicts regime change wars to keep the military-industrial complex humming. Venezuela, Middle East, you name it. He's basically saying inflation will be weaponized policy. And we're going to talk more about that tomorrow or Thursday, so stay tuned. You don't want to miss that one. But hey, let's continue. So he runs the math. Between now and 2028, $15 trillion in new debt. The Fed buys half with printed money. Banks juice another $7 trillion in credit. That's 15 plus trillion in new liquidity sloshing into markets. He maps it to the COVID-era Bitcoin multipliers and gets $3.4 million per coin by 2028. Now, is that exact number gospel? No, Hayes admits it himself. It's a mental circle jerk. But here's the thing. The model is less about precision, more about direction. And the direction is crystal clear. Money printed go burr, Bitcoin go up. The dollar gets sacrificed to keep the empire alive. Your purchasing power melts unless you're holding Bitcoin. And honestly, I don't think Hayes is far off. Look what's already happening. Powell cuts. Trump screaming for 2% rates. Moran inside the Fed literally arguing for steep cuts. Congress begging to pump 401ks full of Bitcoin. The pieces are falling into place a lot faster than a lot of people realize. So whether Hayes' $3.4 million target hits or not, it doesn't matter. What matters is he's showing you the roadmap. Every step screams Bitcoin wins. Next up, this one might shock you. Deutsche Bank just put out a report saying Bitcoin could sit on central bank balance sheets by 2030. Think about it. The same institutions that demonized Bitcoin for over a decade are now comparing it to gold. Why? Because volatility is dropping, supply is fixed, institutions are stacking. Bitcoin looks too much like gold 2.0 to ignore. They're basically saying, hey, governments, hedge with both. Don't replace gold, add Bitcoin. The writing is on the wall. The BIS, the ECB, the IMF, they all know it. Central banks that don't stack sats will be left holding worthless paper. Now, before we hit these 3 massive announcements coming today, look at our likes.
3 or 4 times, maybe.
I gotta pump those numbers up. Those are rookie numbers in this racket.
Quick word from our sponsors powering this show over at the Bitcoin Way. If your wealth lives in their system, it's not yours, it's theirs. That's why we scream Bitcoin. That's why you self-custody. And that's why you call our friends over at the Bitcoin Way. They'll walk you through multi-sig, self-custody, privacy, how to run a node, and the tools that keep you sovereign when the fiat system pulls the plug. Don't wait until it's too late. Book a free 30-minute consult today using that link in the show notes. Need cash but don't want to sell your Bitcoin? Ledn is the global leader in Bitcoin-backed loans, issuing over $9 billion in loans since 2018, and they were the first to offer proof of reserves. With Ledn, you get custody loans, no credit checks, no monthly payments, and more. Visit learn.ledn.io/simply to learn more and get 25 basis points off your first loan. Now, today's circus. We got 3 big announcements. Trump is at the UN. He's literally speaking as I was finishing the show today. But a lot of Bitcoiners are watching. They're wanting to know, will there be any mention of a strategic reserve? Will he drop it? Probably not. And then we have this. Pals at Providence today. The Fed chair speaks post-rate cut. Hawkish or dovish. A dovish pal pumps Bitcoin and gold. And a hawkish pal, well, he might get overruled by Trump's crew. Anyway. Then breaking, Dennis Porter on Spaces, teasing a massive announcement. Is this the Strategic Reserve Act or Clarity Act? Momentum? Either way. Oh wait, I think I know what it might be. We'll clarify tomorrow. But it's bullish for Bitcoin politics in Washington, or maybe a possible nothing burger. Regardless, guys, today is Stack Your Popcorn Day. And a couple quick hits before we close. Congress is pushing the SEC to allow Bitcoin in 401ks. That's $60 trillion of retirement money. Knock, knock, knocking on Satoshi's door. Maybe this is it. The White House expects the market structure bill to pass this year. Huge. Maybe it's all a giant scam. This isn't, though. The hash rate just spiked massively. Miners are front-running nation-state adoption, or nation-state is plugging in. What do you think? And did Scaramucci just say 500K is fair value today? Hayes might tell you Mooch is actually underselling it here. Check it out.
You just have to ask yourself the following question, and then there's a binary move after you answer the question. Is Bitcoin an asset class? Is it an asset class? If the answer is yes, then I believe, therefore, it should trade to the market capitalization of gold. It represents an asset class. That means that a portfolio consultant will go to a large-scale institutional investor and say, you need to allocate to gold. You need to allocate to Bitcoin. NVIDIA, Amazon, these others are investments. They're stock investments. If Bitcoin's not an asset class and it's a collectible, okay, whatever you want to call it, then where it's priced now is probably reasonably fairly valued, meaning it's going to be in or near the Mag 7 in terms of its market capitalization. And so I've taken the position, rightly or wrongly, and I can back it up, I think, with a lot of color and a lot of commentary, that it is an asset class. And it's very unique in the following respect. It's a global asset. If you look at American companies or the S&P 500, yes, people around the world own them, but they're predominantly owned by Americans. Bitcoin has got amazing distribution in terms of its ownership around the world. So if you say to yourself, if 50 or 60% of the people that currently own Bitcoin believe it's an asset class, will they continue to buy Bitcoin? Will they continue to hold Bitcoin? or they recommend it as an allocation in portfolios. If that's the case, then $200,000 is too low for Bitcoin. Something like $500,000 would be there. So
And before we wrap, grab those tickets to Mining Disrupt 2025. See the future of Bitcoin mining up close in Dallas, Texas, November 11th through the 13th. The biggest names in the industry, cutting-edge rigs, Bitcoin and AI integration. The signal you're not going to get anywhere else. Grab your tickets today and use promo code SimplyBitcoin for 20% off, and we'll see you there. All right, fam. No strategic reserve? No problem. Bitcoin is inevitable. Hayes is calling for 3.4 million. Deutsche Bank says central banks will hold it. Congress wants it in your 401k. In short, cry harder, bears. Nothing stops this train. Hope you guys enjoyed this one. Don't forget to like, subscribe, and give us a pound. And set those notifications for the best in Bitcoin news delivered to you daily. Hey, I love you guys. Catch you tomorrow. Peace.
If you prefer to go down with the ship, you.